presentation. As I say, Tim will start with the strategy of the group. That is really the framework for everything else that you will see. But of course, we will then deep dive into many of these topics later. So Tim, it's all yours.
And thank you. So welcome everybody, even from my side here. It's great having you all here. It's great to have all my good colleagues here with us as well for the next 24 hours. To be honest, I'm very excited about, let's say, the whole discussions we're going to have. I have no responsibility with regard to the Oktoberfest celebration. You know, that is Hannes' topic. So if you want to complain about something, you can complain about me. But when it comes to the Oktoberfest, it was his idea. So therefore, you know, I hope that you have your lederhosen with you. And enjoy the evening. For us, this is a really special day, and you cannot believe how much time we as a team have spent to work on this. And by the way, we haven't done that for you, because we do this capital markets for the insight, for talking to our people, because they see us today on stage and they know we commit to something, and then this is becoming the guidance for the next years with insight. So this is more for talking to our people in the company where we're heading to, than rather talking to you what you can expect from us. So it's a kind of, let's say, restart or a renewal of the strategy and how we are proceeding here. So therefore, there's this record day here for us, looking a little bit in the past, what have we achieved, and as well looking into the future, what are our ambitions going forward. And to just motivate us, you know, I had a quote from Winston Churchill, which I wrote this morning. He said, "Success is not final, failure is not fatal. It's the courage to continue that counts." And to be honest, that's a very wise sentence as well for the ones who are not performing at that point in time. So last year, you know, we stated that, you know, that we are on a good track, and we are very proud where we are. To be very clear, you know, we feel like the goodies in this industry. Srini said it, we are the clean house in a dirty street. That is, let's say, how we are looking at us. We had a very strong year. We are overperformed in all of our operations. We are thriving both sides on the Atlantic, in the US with our US team, and as a group here in Europe as well. By the way, our front runner is Dominique with her European team, and 8% growth on the EBITDA side these days. We have outpaced our competition, gaining market share wherever we are operating. We have created superior value for the shareholders. You know where we are standing with regard to the market cap of our company these days. And I hope that we can even convince you that we have the best team in this industry, and that we have a good slate of successors who will run the company into the next generation. This is why Birgit is sitting with me here on stage. The most important thing is the people and how we're developing people. So my presentation is about a little bit going about what we have achieved, but then Birgit will immediately jump on the most important thing, which is about how good is our leadership team, how strong is the slate, what are the people, you know, which we have in the company, and then I will talk about the strategy, which we will then lay out in all details during the next 24 hours. Now, this is the strategy. It's a very simple one. It's the flywheel. And this is the flywheel which we have from the beginning. You know, it was always part of our strategy, and I cannot skip the slides here. Please help me. Nice. It's not working. Sorry, no slides. Anyway, I can do that without slides. The idea is, you know, that we have decided at one point in time to invest. So here we go. I love that. This is not leading, guys. Can I get another one? Is it working? Okay. Here we go. Here we go. Sorry for that. So the idea is our flywheel. And the flywheel was there from the beginning. It was the idea, we invest a little bit more into the infrastructure. By doing this, we getting, let's say, a positive feedback from our customers. They come to us and enjoy the infrastructure and the superior quality of our services. This is why we're gaining more customers than our competition, which is filling our pipes. The pipes have a bigger economies of scales, and the economies of scales are creating more profitability. And by doing this, we gain more, better financials than the competition, which we can use for shared remuneration, for investments, but as well for, deploying even more and better infrastructure. And this flywheel is working perfectly. We have invested 71 billion since the last Capital Markets Day into fiber and into 5G in the footprint of our operations. And this brought us into the position to significantly improve our infrastructure, which brought us into the #1 position in almost every market, and which has given us 300 million customers across the footprint of our entities, which helped us to increase our EBITDA, by 31% since the beginning, increased our EBIT earnings per share by 46%, and helped us to keep the momentum on the investment side as well. On top of that, we were able to increase our shareholder remuneration at the same time, and that's the ambition, which we want to drive going forward. Now, I can give you the details, but you know that. We are #1 in brand value. We are #1 in customer experience across all the markets, and our brand is the most valuable brand of Europe, ahead of Mercedes, ahead of Volkswagen, ahead of Chanel, or even Louis Vuitton, by the way, in all, let's say, rankings which you can find. The brand, especially for consumers, is super, super important to differentiate. We have a leading position in fiber and in 5G. And you see that we have improved our FTTH network in Germany up to 10 million households now, which are available, same size in the European footprint. And on the mobile side, we have almost in all businesses, in all markets, a coverage already of 98%. In all of the markets, we are ranked #1. This helped us to grow in the markets. And what you can see here is the total number of customers, 4% mobile postpaids in Germany, 3% in Europe, 4% mobile postpaid in the US, 2% broadband customers, 5% broadband customers in Europe. So everywhere we grew our customer base, filling the pipes. And what you can see is we were growing this business by growing market share. So in every market where we are operating, we have gained market share compared to our peers. And you see that, for instance, in Germany, 45% of our net adds is our net add market share these days, while our market share is around 35%. Same is true for the US, or you can see that in broadband as well, where our market share is significantly about our net add market share, about our incremental customer base. So we are growing beyond our current position. On top of that, we are able, with intensifying the customer engagement. You know that we have Magenta Moments in Germany, 10 million transactions on this engagement level. In the US, it's called Magenta Status, which is very active for customers get awards, get benefits by using these services, and this brings us closer to the brand. This constantly keeps us in a contact with this client. This is driving then higher net promoter score. It is reducing the churn, and at the same time, it gives us the capability of upselling. And you can see that NPS since 2020 improved by double digits. Churn is down 20 to 45% respective to the markets. ARPU is up 10 to 50%, depending on the market variance, and the amount of interactions which we have has doubled. So this is very important if the base is the base on which this company sits on. If you have 300 million customers, you have to keep them happy and you have to retain them and give them offers, something they don't get at the competition, to keep them with us. Customer experience is the one which is the driver for the future. And yet, as you can see here, we have significantly used digital transformation to improve our services. And you can see that here, our e-sales shares is going up. Our claims and complaints are going down significantly, 67% since our last capital markets. Reactive truck rolls, which are quite expensive, went down by 32%. And the app penetration, which is so important for the interaction with our customers, is going up to new record heights, 62% in Germany, 73% in the European legacies. So all this digitization is helping us to improve customer service. Sustainability, even if we have sometimes the feeling that's not so much anymore at the heart of investors, we keep on running. We are not stopping. We will continue our efforts to significantly reduce our emissions. And you know, since 2021, we are already 100% based on renewables for scope 1 and 2. But what is even more important, we were even able to reduce scope 3, 23% emission reduction since 2021 in our footprint. And this despite the fact that our data, our consumption of services have doubled at the same time. So by improving data consumption, by improving data service, by improving data center access for our clients, we were able to reduce our emissions by 23% in the footprint. On the circularity task, we are on good track with regard to the recycling of fixed line devices. 61% are coming back and getting recycled, entirely recycled with no ICT waste to landfill. So it's going in full recycling. We have a challenge when it comes to the mobile devices, because mobile devices sitting there, the industry doesn't have really the motivation to recycle their services. They always want to sell something new, and therefore only 25% for mobile devices are coming back for full recycling yet. But we are working, and we have a new program, which I'll show you later, on how to improve this number going forward. And on top of that, we had a lot of beneficiaries when it comes to social investment. You know, the T brand is an inclusive brand. It's never an exclusive brand. We are for everyone in society. For the ones who cannot afford our service, to the ones who are super rich and don't care about what the service costs. Our brand has to embrace all of them. And therefore, our brand has to sit in the middle of the society. And that is what we are trying to do with a lot of, let's say, benefits and a lot of contribution we're giving back to the societies. 51 million people benefited last year alone. In the US, we have this big 10 million digital inclusion program running. Same for Europe and Germany. 51 million people participated in kind of digital inclusion activities of the group. The worth of this last year was 1.5 billion euros. This is almost 1% of our revenues, which we are giving back for social contributions into the societies. So we keep on running on delivering on our environmental and on our social commitments, and I think we made great progress compared to last year. I always said portfolio management is incremental part of an operational strategy of a company. You have to focus on your portfolio and do the right things. And we divested to be able to invest. This was one of the paradigms which we were pursuing in this group for the last 10 years. We sold Netherlands, we monetized towers, we had this fantastic deal with SoftBank on the Sprint transaction, you know, where we were able to guarantee a purchase price of $108 for the T-Mobile US stock. We have the DT Capital Partners as a venture arm, which is giving us a lot of money back already. This money helps us to drive the change and the organic development of our group. For instance, you know, we were able to increase our share in the US from 43.6 in May 21, since we met last time, to 50.4% today. And we did that with different instruments, And we created for our shareholders and for us, only with this stake, a valuation which is now 48 billion higher than it was in 21. So this portfolio management and this smart M&A in the back, which is helping us, to organize markets, to find, let's say, the right partners, and even, to monetize assets at high valuations, helped us a lot, to generate shareholder value here at the same time. Now, the outcome, and Christian will go in very detail to this one, is since 2020, we have increased our service revenues by 5.5%, organically by 3.6%. Our core EBITDA grew by 8% on a CAGR basis, organically 6.9%. Our free cash flow rose on a CAGR by 31.8% over this time. CAGR from 6.3 billion to 19 billion, despite the fact that we invested 71 billion into the future of this company, and the return on capital employed was ahead of 6.5%. So we are earning our capital costs in all the markets where we are operating. This is the consequence, and you know that. I should not teach the market, but going from 80 billion, market cap, Mike and Peter in the US, to 222 billion euros, by the way, over these few years is amazing. I think this is a story never been written before in this industry. And Deutsche Telekom was just another telco at 2020 with already 60 billion. And we are now 131 billion. And we are more worth than all telcos in Europe together. Now the question is, why is that the case? Why is T different? And what is different with the DNF? What is behind that numbers? And what is the foundation of that company? And if you don't understand why we are performing that way, I think you have to better understand a little bit the DNA, maybe even the principles, the beliefs we have in the company when making decisions. The first belief is leading attitude in everything we do. I expect that an accountant is doing his accounting in a leading manner. I expect that we have a leading service with regard to customer service. Our network should be leading in the eyes of the customers and the network drive tests. If I'm standing on this stage, I want to be better than all my CEOs who are out there. If everyone in the company has a leading mentality, and I can tell you, not everybody has it, but the more they have it, this company can only succeed. This company can only win. So leading attitude in everything, how we do the things, even the small ones. Second, customer delight and superior quality is the best financial investment. It's not a hygiene factor. It's not something where you just have to do it like your peers are doing it. It's not a cost. It's a super accretive investment into the future. Never lose market share. If you go into losing market share, you lose service revenues, you get it, let's say, to the shareholders who want their dividends, you are not able to pay the dividend, or you pay a dividend, then you cannot invest anymore. This flywheel is not working anymore. If you are losing your base, if you are losing customers, I can tell you, you lose the base for the flywheel running. We will never lose market share. And if we lose it, we analyze it, we change the business model, and we fight it back. This is, let's say, a DNA where we are today leading in all the markets because we are gaining market share. Sustainable growth and continuous transformation is deeply rooted in our DNA. Finally, I very often say T stands for transformation. To keep the momentum, to constantly willing to change the status quo, to constantly be agile and adapt to the situation was something which was helping us in the past. The willingness to question even success. Long-term orientation with persistent short-term orientation. A lot of telcos have huge, dividend yields, huge payouts, and they have lost the sight for the long-term perspective. Maybe good for short-term, never good for long-term. And I think, what was successful at Deutsche is that we were able to balance this in a quite reasonable and good way over the past. I know some of you hate the high investments we did. 21% capex to sales ratio is quite high. But at the end of the day, it's paying off. Smart portfolio management, I mentioned that. We have the best M&A team in this industry. Nobody was able to make 27.5 times multiple on their towers, and I do not want to give too much credit to my M&A team here, but I'm very proud to have these guys being so smart. Unique balance between global scale and local entrepreneurship. Don't underestimate that. If you have a global company like ours and you centralize, the power is not sitting in the country anymore. People get demotivated. But if you let the countries do what they want, I can tell you, you will not take the benefit of a global company. So what is the right balance to find between global and local? Keep the people empowered, give them the ownership for their business, their local adaptation, their flexibility, but at the end of the day, don't give up on the benefits of the synergies of a big group, which is unique compared to other players. Create a business with purpose. To be honest, I don't like the word ESG. I even don't know what it is, especially the G. For me, ESG means having a purpose in what I'm doing, connecting the world, and on the other side, creating no scandals, being integer in what we are doing, being open-minded, being in the society, and being a lighthouse for the customers. No scandals. We were lucky having no scandals. If you have scandals, I can tell you the management is entirely focused on getting things fixed, than rather focusing on customers. Radical transparency to create trust and reliability. To be honest, that sounds obvious for you guys, but we always have the discussion, which kind of things should we release? And by the way, a lot of my colleagues are only releasing good news. By the way, you're not sleeping on the tree. You know what's behind and you're trying to find it out. So be open. Radical transparency, even if you don't make things in the right manner or if you fail, you create credibility by being authentic. And if you have that in the company, you don't have the politics in the company. You're open-minded and say, this was the good, this is the bad, and this is the ugly. I can tell you, it helps to accelerate the way to transform. Sometimes this hurts, sometimes this is uncomfortable, but I can tell you, it is accelerating how the company is changing. And the last one is create passion in the company. Create a diverse thinking in the company and create ownership in the company with becoming, let's say, shareholders of the company. And we will talk about that in a second, about how many people are owning stocks in Germany and in European constituencies already. And diversity, you will talk about this one as well. I think this is the foundation. And if you look to our strategy, this is it. This is the core. This is always there, it has been trained, but it's at the core. The rest is a strategy which we can do, which we can improve, but this is the core. Now the outcome is very clear. To be honest, we are very happy with where we are sitting here after our last Capital Markets Day. I do not go into the details of it, but most of the KPIs we overperformed, or we achieved. There's only this IDC issue where the inflation and some other topics hit us, but Christian will go into details where we see a clear red, and a little bit of the cash capex where we invested more than what we have promised, but this is a 100 million deviation. Nevertheless, let's talk about that one at a later stage. Overall, I would say the grades of our record is quite good. This is, by the way, bringing us into the position that for this year, we announced the highest dividend Deutsche Telekom ever paid in history. It's 90 cents. 78 was, 2008 at the beginnings, now we go for 90 cents, which is bang in line with our commitments. And on top of that, we agreed with our supervisory board to always under the assumption that we deliver on the numbers which, we are expecting for 2024, that we have an additional share buyback of 2 billion, of up to 2 billion for the upcoming 12 months to support, our belief that the company's terminal value, the company's internal value is significantly higher than what we have currently on the stock market, and we believe it's a good investment to buy back shares. With this, I want to come to the people who made this success possible. Not only the 200,000, but especially as well the leaders, and I hand it over to Birgit.
Thank you, Tim. It's a true privilege for me to be here today, because I not only take care, I truly care about the heart of our organization, our people. And Tim just said it. We're the best team in the industry, 200,000 people on both sides of the Atlantic, and with passion, diverse thinking, and business ownership. And I have a simple mission here for the next 15 minutes. I want to give you some proof points, but also a little bit of flavor of this best team, of our culture, and why we are actually different. And of course, it starts with our leadership team. We created our leadership anchors, and our joint mantra is, good is not leading. And you heard Tim complain about this is not leading. This is what we're pushing all the time. In the last years, we have actually renewed our leadership team, and today, 60% of the business leaders, so our top 50, and 70% of our transformation team, our T3s, are less than 5 years in a row. When it comes to BLT promotions, we've seen a very healthy mix of internal and external candidates. And it shows you two things. First, we have a very strong internal bench, and we're able to attract top talent from external leading companies. For us, diversity is actually a driver of performance, because diverse teams simply make better decisions. And it's not only about gender diversity. It's about a mix of experiences, skill, international expertise, and also age diversity. And you've also seen, and already seen, quite a few of the BLT colleagues on stage. You will see more tomorrow. So there is some proof point on our strong team. And this team is significantly more diverse than 3 years ago. But I assume you hear from everyone that they have the best team and that they are leading. So it's an easy claim, but a little harder to prove. We really wanted to challenge ourselves. We wanted to know. So in 23, we actually hired Egon Zehnder, one of the finest leadership advisory consultancies, and we went through rigorous individual development centers. We did it all as the board, with our top 50 and quite some success were going through that. And it was personality tests, it was 4 hours of interviews with 2 interviewers taking turns, it was individual feedback sessions, and at the end of the day, we got an overall results. We shared that, radical transparency, with our BLTs, where we are leading, where we still need to grow. And one quote I would like to share with you from the Egon Zehnder report, it's, the leadership team is stronger than market benchmark, ranging in the 95th percentile. And that's what we're proud of. We invest a lot into this strong leadership pipeline. And I can tell you, we as a board are very involved in that. In almost every board meeting, we're discussing placements, succession pipelines, performance of our BLTs and our T3s. And for our top 200, 230, we decide on every single placement as a board. And I can tell you that's not a tick in the box, a formal 1 minute item on the agenda. That often triggers really vibrant discussions. Until 27, we will continue to renew our leadership team. We finally want to reach 30% female executives. We will continue to grow the share of executives with international expertise and also deep tech expertise. We've also set ourselves a target for a more balanced age distribution. The majority of our leaders is still very long in the industry and in the company, and we're privileged to have their expertise. At the same time, the fast-changing environment calls for more younger leaders. We need their cutting-edge skills, we need their fresh thinking, and that's why we've set ourselves an internal target. Egon Zehnder also talked about the performance orientation of our leaders, and we actually foster this through our compensation system. Since 21, we've also included environmental targets in our executive pay, but we also wanted to have more skin in the game. So in 23, we changed our share matching plan. And now 96% of our executives actually have shares and invest in the share matching plan. That's up 40%. Our leaders believe in our strategy and our leaders believe in our culture. And I believe that our culture is actually the true secret source of our success. And we shape our culture with and through our leaders. Tim, it was you who actually invented the BLT and the T3 learning journeys. And I only joined in 2019, but I remember every single trip. Joining in 2019, my first trip was to South Korea, and we visited SK Telecom. Why? Because that was the technology leader, and they already had a nationwide 5G network, while in Germany, we were still, in the auction process. We wanted to see it live. We learned about the Korean culture, Bali, fast. And we actually translated that into one of our guiding principles, get things done, that we didn't have before. Estonia, 21, we went there to understand how that country had become leading in digital society and e-government. We talked to government officials, and they told us about the pivotal decisions on e-identity they had done. We also learned some interesting facts that getting divorced is one of the only things you can't do online in Estonia. In Finland, last year, we were actually quite impressed by the ecosystem of startups that we saw in Helsinki. And if you see us all in blue up there, this is at minus 30 degrees in Lapland as a team doing outdoor activities, and that clearly got us out of our comfort zone. For me, these are experiences, and for many of our leaders, that money can't buy. They're inspirational, they're out of the box, and we always want to try to learn from the very best. On his slide, Tim talked about continuous transformation is part of our DNA. From the people side, I can add continuous workforce transformation is part of our DNA. So we've reduced our workforce by more than 25,000 people from 2020 to 23. And against a common myth that headcount cuts are impossible in Germany, we've actually reduced over proportionally. Effectively, quietly, socially responsible. And the drivers have been automation, digitization, quality improvements, and of course, back office cuts. At the same time, we've become younger. So our average age has actually declined by almost half a year in the last 2 years, and we've increased the number of people who provide services from around the globe. Of course, this is driven by cost advantages, but also by really access to top digital and tech skills. Today, we have 17,000 people working in T-hubs around the world and in the global delivery centers of T-Systems. And India is fast growing, today reaching already more than 5,000 people. Until 27, we will further accelerate workforce transformation, and AI that Claudia and team will talk about will help to achieve that. We will increase our global workforce shares to more than 50% in technology, 45% T-System, 50% for internal shared services. And as part of workforce transformation, of a responsible workforce transformation, we continue to invest in future-proven skills. Last Capital Markets Day, we actually introduced a KPI for that, and that's our share of digital experts. So it's people really working like software engineers, like data architects. And our ambition was to reach 17% of a total share in the workforce by this year. We clearly over-delivered, and we reached that target already in 21. Today, we're 30,000 digital experts, and 7,000 of them have AI expertise. And we plan to grow that share to 25 to 30% in 27. We continue to invest in our skill transformation. We're among the leading and largest Ausbilder here in Germany with 5,000 apprentices and dual students. We have state-of-the-art digital learning offers, and just to give you one number, of course we focused on AI, and till today we have actually had 90,000 people participating in our AI learning offers, from simple things like prompting to the advanced stuff for the experts. AI also will accelerate our HR work, like in any other area. So we're rolling out a skill intelligence platform that now helps us matching the skills of all our people towards projects, jobs, and also learning offers, and thus making a lot faster, but also a lot better recommendations. Let me come to a close of my part here and back to our culture. What is truly setting us apart is the purpose, the values, and above all, the passion of our people. And you find a lot of numbers here on this slide. They show you that our people are fans of our brand, that they find their work meaningful. Our favorite number is the 40% of employees in Germany that have actually invested in our Shares to You program, and it's being rolled out internationally. Yet, it's hard to explain culture through numbers. You must experience it. And I experience it, when I'm doing one of my X days, our customer days that we have mandatory for our leaders with the frontline colleagues. I experience it with the 200 volunteers at our Special Olympics, when I feel the energy of our young teams in Pune or in Granada, or also at the Jubilee celebrations in Phantasialand, close by, where we celebrate the colleagues that are 25, 40, and even 50 years with us. Just 2 weeks ago, we had our Living Culture Day, and we do that once a year. We remind ourselves of our purpose and our values. And this time we had the motto, the power of we. That's probably a good summary of the best team. Diversity is our strength because we share a leading attitude, we share a strong set of values, and we have a common purpose. We won't stop until everyone is connected. we won't stop to deliver on our 27 ambitions. And what these ambitions are, Tim and later on the colleagues will tell you. Thank you.
Thank you, Birgit. I'm so impressed how disciplined she is. I never, follow the speaker notes here. She was on the spot on this one. So let me create chaos again. By the way, Nietzsche said, if you want to give birth to a star, create chaos first. So anyhow, that said, what is happening going forward? And what are, let's say, the changes which we are facing in our industry before we go in what we are doing? And we can talk about that for ages, but there are 6 major trends in our industry which are forcing us to change the way how we organize our business. The first thing, artificial intelligence is changing everything. I think it is the biggest game changer I have ever seen in my life in technology, and therefore we have to embrace it, we have to adapt it into every activities which we are doing. Both, by the way, from an efficiency perspective, but as well from an improvement for customer service, customer interactions, for individualized offers and alike. The second thing what I see is the race for customer engagement. We are living in an industry which is getting more and more mature, which is commoditizing. So the question is, what can you do to differentiate in the eyes of customers? Aside of price. And therefore, we have to reinvent a way of interacting with the customers. I talked about Magenta Status and the Magenta app and our moments already. We're talking about the way of digital first, of the way that we automate, and adapt our services to the generations which grow up with the technologies. But we have to enable as well new services like eSIM services, like APIs which developers are using, like even other connectivity services into the one which we are having to create engagement and to connect the people in every situation of their digital lives. Enterprise digitization and software focus. If you are talking to a business customer today, the business customer is not focusing on connectivity alone. He's not interested to talk with me about connectivity. He's always asking me, by the way, how can you create an added value for me out of the connectivity? And how can you make sure that this connectivity is safe and secure? And how can I improve my productivity of my specific business model with your service? And this is exactly something which we have to adapt in our B2B services, that we help customers to digitize their businesses, including, let's say, new opportunities like IoT, robotics, or private network infrastructures. Disaggregation and orchestration is the way how we run the networks. We talked about that one, getting independent from vendor black boxes, getting independent from this proprietary technology verticals we are buying in our industries, and getting an advantage from the cost and as well from a sovereignty perspective. The functional decomposition, the cloudification of monolithic network architecture is something which we overcome with software architecture, which we are developing, by the way, not only for every country, but for the joint group. And a kind of large-scale adoption of AI in this network operations is a way of optimizing, of creating security, but as well higher productivities. Global platform economics. Guys, you are looking to over the tops. We are looking to all these digital ecosystems, and we always appreciate the way how these guys are developing one product and scaling it out throughout the whole world. But we never think the way for the telco industries. We always think this is a kind of local industry, boom, siloed, pillared built, country by country. There must be horizontal synergies within this value chain, which we can use and which we have to deploy. Telco as a platform on top of that, enables us to integrate even third parties into our propositions. Being it, let's say, Starlink in the US for areas where people are not covered with network infrastructure from a terrestrial basis, or being it, let's say, CPaaS models in the ecosystem with our B2B customers, which we are having on the fixed line side. And customers are changing as well. The need for a purpose-driven organization is getting more and more relevant, not by the way only from customers, but as well from political leaders. I can tell you, they look at us, you have more discussion about a data breach than you have maybe about a new price proposition in the markets. And therefore you have to be very resilient in this kind of global ecosystem, which is getting more complex every single day. Now, how are we reacting on this one? And in my presentation is just giving you the headlines. We will have deep dives on each of these topics later on in the presentations of my colleagues. So therefore, I'm less focusing now on the KPIs, but trying to be more focused on the principles of the narratives of our strategy. Let me change first with the way how we are developing this flywheel. The T, the foundation, our strong why T is different, stays. We will do everything to make it even stronger. The idea of investing more, having happy customers, being number one, the idea of creating high efficiencies and better financials stays as well. This is successful. Why should we change it? But we want to accelerate our flywheel by putting two components on top of that. The first one is create the benefits of global scale, better than we did. We are the provider of the Western Hemisphere. We are the biggest telco in the Western Hemisphere. So how can we jointly generate more benefits by collaborating? Everything what we scale in Greece, or Macedonia, or in Germany, if you can bring it like the app into the US, is scaling immediately exponentially. The US is a way for us to scale up and to reduce the cost in our ecosystem. The second one is data and AI. We put this data-centric organization and the ability of AI at the core, at the center of our strategy. This is maybe different to other telcos, but we believe in every kind of part of our value chain. It will help us to become an even better telco. Now, in detail, I'm going to skip that one because it's describing again what I said already. We start always what the foundation of that company is. We stay a focused infrastructure player. The core of the core of the core is 5G and fiber. 5G and fiber. Let's talk about fiber for a moment. Now, here we are pursuing two principles. We have countries where we have a legacy. An infrastructure like Germany with 70% copper infrastructure, vectoring and super vectoring, working very nicely. In these markets, our principle is, over the next years, we are changing, modernizing this infrastructure and the same infrastructure share from copper into fiber. So the value chain stays the same, the technology behind is different, including switching off copper at one point in time, but we will not give up infrastructure share. So if we have 70% infrastructure share in Germany, our ambition is to build 70%. If we have 50%, we build 50%. So the principle is, we are not going on wholesale models or whatever, we are building the same infrastructure. And that is what you can see here. The broadband market share and infrastructure view is what we are driving in the markets like Greece, in the market like Hungary, in the markets like Germany. And then we have markets where we have a strong mobile footprint, but we don't have a copper infrastructure, a copper legacy. So in this market, for us, convergence fiber is a great opportunity to gain and to grow. Like we're doing it in the US. We announced 12 million households, which we are going to cover with the acquisitions which we recently announced. We do this following a logic of internal rate of returns on profitability, opportunities, and growth in the core business which we have. We're using the distribution, we're using the customer service proposition, we're using our brands to develop this business. A little bit opportunistic. It's not needed to have 70% like we have it in the copper ecosystems, but it is following internal rate of returns. And that's the way how we are driving growth. Homes passed in Germany up to 17.5 million. Every year we're going to build 2.5 million households. This is why we are going in Europe for 13.5 million households. Every year 1 million more. And that is, let's say, how the fiber utilization in this footprint is growing over time and how we see that. And in the US, you know the numbers, Mike and the team showed it, 12 to 15 million households is the ambition which we're having here. What's the principle of 5G? Now, you have heard that 100 times. And I had a very interesting discussion with Mike. You know, Mike said, Tim, what is going on in Europe? Everybody's complaining about 5G and saying 5G is not a business case. You're nuts. How can you talk it down? 5G is the best after sliced bread. It made us rich. It made us successful. We are 5G winners. Without 5G, I would not be, let's say, in the number one in the US market. 2.5 gigahertz deployment made us the number one in the US. There's no question that without 5G, we would not be where we are today. Outperforming AT&T, Verizon, every single drive test. I was thinking about that because I was one of the guys complaining that there's no business case of 5G. So I came back after that discussion and said, by the way, guys, is it true that 5G is a problem? And then we did a business case, and we can go into the details of it. We were very early investing in 5G. We were driving 5G. It helped us to improve the productivity of the network, energy efficiency and other things, and we looked it up. Since we have deployed 5G, we have grown our market share in Germany on an annual basis by 3 to 4% points. Because customers are recognizing that our network is significantly better than the network of Vodafone and O2. The customers are willing to pay us more. Our ARPU is not shrinking anymore with the speed as it did before. The profitability of that is positive, and the NPV is already positive on the 5G investment which we have taken. There is a 70% return on capital employed on the 5G investments which we have. Now, I cannot talk for everybody because I know the European industry, 65% of all European mobile players don't earn their capital costs. But I can tell you one thing, we made 5G for all the markets a winning strategy. We are changing the narrative that 5G is a bad thing. For us, it's a great thing. And we will pursue everything to accelerate our 5G services. The next thing, superior customer experience to monetize the full potential of B2C services. I talked about that one already. How can we increase our net add share always above our market share? How can we increase our ARPA, which we are gaining from the customers? The answer is very simple. We are not benchmarking us anymore with our telco peers. We have to benchmark us with the over-the-top players and the way how they are interacting with their customers. And we have a lot of ways of improving this potential. Think about the way of utilizing, of deploying, of serving Glasfaser in Germany, in our markets. Think about the proposition around TV, which is growing nicely, by the way, in Germany with, contents like the European Championship. Think about beyond core services, which we're going to talk about in Dominic's presentation later on. And think about, let's say, always this upgrading of the network for the customers, which is increasing the customer experience around it. By the way, more for more as a principle of that logic. So customer orientation is very important. Next thing, B2B. To be honest, we declared B2B in Europe, in Germany, a turnaround case. By the way, if you declare it a turnaround case, it's very easy to change. Because people, if they accept it, they know they have to do something. New management on top of it. And when we started from the scrap to analyze every single market, every kind of, what is the portfolio about? How can we grow a customer base? This is a significant business of us. We have 20 billion euros revenues in this entity. We have 40,000 people deployed in these areas, more than 5 million customers on this angle. And by the way, we were not that worse as most of the peers because we have this strong IT capabilities in our group as well, which helped us to mitigate the shortfalls on MPLS and some fixed line services. And therefore, we believe with this new setup, we can grow the business with 5% prospectively, and we're going to be able to even grow our profitability higher than the 5%. This is super relevant for the future because here you have a true differentiator where not price is so super relevant, but the added value you can generate. And what we need for that is the systems. What we need for that is the IT capabilities which we have. Luckily, and maybe we were the laggard not selling this asset, but we have it. And we now using the systems to help us to work on cloud services with our customers, on SaaS products with our customers, so that we create an added value which is beyond the connectivity piece. So what I'm telling you here is the narrative behind B2B is the systems and our global footprint in the Western Hemisphere is one of the propositions we want to drive. Boosting efficiency on all levels. We are not getting tired on improving our cost basis. And by the way, must do for all industries. Now, the idea which we have is that we're reducing our cost base by an equivalent of 1.5 billion over the next years until 2027. This is an equivalent reduction of 3 to 5% of the projected service revenues. Because at the end of the day, if we are growing, our cost base can grow as well, as long as our margin is improving. So therefore, it's not the 1.5 million alone because we want to grow the business, but we want to improve the margin of our areas. And this is taking place in customer-facing functions due to, let's say, AI use in all these areas, operations, SG&A, overheads, and the like, where we have started an operational program last year, which is now getting harvested over the next year. Next thing, AI. To be honest, I'm personally the head of AI in this company. I have no clue compared to the AI experts. But it's me who is driving this project to show everybody how important it is across all the domains. And I'm very happy about where we are. How many people are already part of the story? 70,000 people already getting trained here in Germany alone on AI tools. We have a great foundation in the way how we build it. The first one, we have an AI competence center being based here, which is helping the departments who don't have their own IT or their experts there. We have an AI factory within T-Systems who is developing on a more sophisticated basis, I think with 800, 900 people, AI services in the group. We have a huge partner ecosystem. We don't put everything into one basket. We are working with Gen AI, for instance, on chatbots, but we are now finding out that the open models are giving the same results at significantly lower costs. So why not working with Llama and other things, or Mistral? We are developing our own LLM in areas where we don't get a service. Think about the telco specific LLM, which we have developed with SK, Etisalat, Singtel and others, which is showing first already results. And on top of that, we have, let's say, a lot of partners like Sprinkler or Perplexity, which are services which are sitting on top of the LLMs to bring an added value to our customers. And we will soon come up to make AI a proposition for customers in the consumer area. How can customers benefit from AI? Like we are doing it maybe already from a daily basis. On top of that, we have a super great asset base. Think about the data platform, which we have developed over years now, 100 million app sessions on a monthly basis where we have the data points. 18 million one-shop users on our websites. 5.5 million RDK routers just being deployed and giving data on every minute while we are sitting here. This is the foundation which we can use for the productivity on AI. And then what we want to do as well is the leveraging AI as a product. Eat your own dog food, but then sell it to your business customers. Trying to use what you are doing, what you are doing, chatbots, for instance, and selling this to third parties to monetize on the skills which we have developed on ourselves. Now, another narrative is there is no business case for AI. I can tell you one thing, for my companies might be true. For Deutsche, it's not true. We are committing already today for significantly savings on AI. To give you an example, efficiency via contract analysis and drafting of legal documents, minus 10%. Cost saving in our organization. Autonomous networks, networks who are predictive, networks who are more, steering itself, less human interaction, more detectional work automized, 20 to 30% productivity gain. Accelerate productivity in all the software development we're doing into systems, but as well in our business areas, 20 to 30 productivity gains. Improving our net promoter score by 10% points by automated proactive Wi-Fi repair. This is another productivity gain, significantly for our service areas. Sales and service, bot use and others, 20 to 30%, and we will talk about that later on. So we are committing to the business case of AI. We see the significant advantage of that one, and we want to leverage across all the businesses. My last topic on the strategy is to accelerate the global scale and leveraging our unique footprint which we have here in the group. Now, we have started with this already. If you look to our strategy, we have a very homogeneous strategy on the US and Europe. It's a single strategy, it's mobile and fixed. It's very, very consistent. It's not that you have to learn every market separately. Very consistent in the way of what our priorities are. We have global hubs where we have people deployed. We are participant on global alliances on our APIs, even in the collaboration of businesses. We have a global go-to-market with our brand, which is absolutely consistent in the brand architecture and the way how we appear. We have our multinational customers which we are serving, or we have a global carriers developing the global backbone services. Common product platforms, which we are developing jointly together. The idea of the app, the idea of the RDK routers which we need in our footprint, the idea of the T device which we're trying to explore around the continents, the idea about the architecture about customer services. And now, even the idea of bigger things in the network architecture, in the way how we procure, in the way how we build an alliance, should be part of the business case of the future to take the advantage of the scale which we have compared to all the others. We have the duty to prove that we are different than a local telco. And we have to prove that there is a benefit by scale. That said, our portfolio management stays an incremental part. And we will talk about portfolio management as well in one of the sessions. My message here and my narrative is we still have a lot of opportunities outside of our core business to generate value. Think about if we would get a re-rating prospectively for our DT stock over the time. Think about if we take more assets, more shares in our US operations with the liquidity which we have over time. It's helping us big time on the numerator. Because the earnings will always, let Deutsche Telekom benefit from that one. We can leverage the transatlantic scale in a better way, which we're doing already. To be honest, a lot of, let's say, the experience which is now used in the US to participate on private equity companies and in the fiber rollout has been, let's say, laid out or experienced already earlier here in Europe. GD Towers is still sitting there with 49% of the assets. And on top of that, we have the Eastern European towers, which are ready to get integrated or to get monetized. The outsourcing process is already on its way. We have new options at BT. Let's see where it's going. I think it was wise to keep calm on this one and not, being overactive. I think the development is going into our favor. And we have the tech fund with 2 billion, which is ready to get invested. On top of that, for the first time, and I remember that we said last time I have a 50 billion problem. 20 billion problem was how to get the majority in the US, and 30 billion was the question about how do we get the fiber investments financed, which we have now. This problem is off the table. For the first time in history, this group is in another position. The US has said we are generating 20 billion additional funding for strategic optionalities. We have already plus 10 billion committed to investments which we have already announced. That leaves us with 50 billion, up to 50 billion, which we can consider for shareholder remuneration, for debt reductions, for other opportunities. If we take that together and look to the business case which we have generated, and taking all, let's say, our shareholder remuneration compensation out, we still have 15 billion in addition, which we can use for debt reduction, for shareholder remuneration, for acquisitions or other optionalities in our footprint. So we are in a much better position than we ever were in our history. Circularity, climate, and social. My message is here, we keep committed and we make this a net zero company over the next years. And on top of that, we will change the way of the circularity score for the mobile devices with a new setup, that we reuse, that we collect, and that we recycle these devices and the network IT in a different way. And we keep our momentum to have beneficiaries in high double-digit million scale across the footprint for the upcoming years. Now, I have to come to the conclusion and to the final end here. We said last time we're going to grow this company by 3 to 4%. We are now saying service revenue we grow by 4%. We have said we are growing our business on the EBITDA side last time by 3 to 5%. We are here now and committing ourselves to grow the business by 4 to 6%. Our adjusted earnings per share should grow by 11% over the next years. And our cash capex, our future, our long-term remuneration should stay at an investment rate in the European footprint of 21% capex to sales ratio, which gives us always a leeway to be leading in the categories of the infrastructure, which is so important. Free cash flow should rise up to 21 billion in 2027. And we are increasing our ROCE commitment from 6.5% or up to 6.5% to 9% in 2027. And we keep this company in a kind of very solid refinancing capability of 2.75, which was always, let's say, the guarded or the protection for us to be without any kind of capital market exposures in the future. If we do this, and if we bring all this kind of thing together, based on our strong foundation, accelerating is with AI and with scale. On top of that, with the way of executing along the line, the terminal value, the NPV of our company is 60 billion higher than today. There is a big step coming out of the growth, 5% service revenue growth in the US. This is a growth company and stays a growth company. 2.5 to 3% service revenue growth here in Europe, which is, by the way, best in class if you compare us to the other leaders here in the market. There is a package coming from the improvement of productivity, 4 to 6% growth on the EBITDA side, and at least 1 billion of savings coming from data and AI scale and productivity. And on top of that, we see upside with new services beyond core, leveraging the global scale of this group, having portfolio decisions which we haven't, let's say, included in our plan yet. For instance, all the acquisitions the US has announced recently are not part of the business case yet. We have just put the debt on our shoulders, but not the benefits out of these transactions. And on top of that, the surplus investments, which I mentioned, being it, let's say, the 20 billion US or being it the 15 billion, which we have here in the European footprint. So this is giving us an upside to significantly increase and double down Deutsche Telekom again in the future. These are our commitments for the midterm and for the upcoming future. And now we will deep dive in every single element of the strategy. Thank you very much.
Okay. So, thank you, Birgit. Thank you, Tim. That was a tour de force. And I hope you got a good impression of how we intend to maintain the pace and even accelerate the pace going forward. And you will, of course, get a lot of detail and support for these messages later on today and tomorrow. So with that, we can start the Q&A. And I see Polo has a question. And many people have a question, but he raised his hand first. Okay, start with you, Polo. I can hear you, but you have to press the button in front of you. Then, like everybody who asks a question has to, of course, press this speaker button in front of them, so your question can be heard in the room and also in the stream. Sure. We can hear it now, so go ahead, please.
Shall I repeat the question?
Yeah, I got the question. Look, to be honest, I cannot answer that question right away. That is depending on the situation. It's depending on the share price of the US. It's depending on our view of how we're looking on the situation. There is no must, to increase the share price of the US. That is a question about the internal rate of return and the way how we're looking on this investment. Now, we have now said we're going to start with the share buyback this year, and we extend that for another 2 billion next year. This commitment is already giving for the share buyback of Deutsche Telekom stock. And that is, let's see how we are pursuing now. Look, the answer on the US is there is no need for us, or must have to go into a significantly higher shareholding. A high, 50 shareholding would be sufficient for us. So this is a commercial decision which we can take aside of that one. And that is how we are looking at it at the end of the day, comparing, let's say, the optionalities and the internal rate of returns of these investments.
Good. Let's continue with David. David, Wright.
Yeah, maybe this one works, I think. Thank you very much. I think another Churchill quote was, "If you mean to profit, learn to please." So I congratulate you on an absolute focus on your customer experience. I do have an AI question, but I think I'm going to hold it for the session tomorrow. But maybe one of the, you talk about acceleration, and you've accelerated so many of these targets. What is fundamental to this industry is always the infrastructure. What you haven't accelerated is your fiber build at 2.5 million lines per year. And you are, as a company, as a country, lagging so much of Europe now with your fiber coverage. And it would also seem too that fiber is not necessarily about getting more revenues from the consumer. It's about switching off that legacy, very aged copper. And there is no obvious target given by you on this, whereas other telcos are even doing it this year. So I guess my question is, within all of this, why no decision to accelerate the most important fixed investment of all?
Look, by the way, there is Srini tomorrow on stage on this subject here, or today, so and we should deep dive with him. But my general answer on this one is, it's interesting where you're coming from, because a lot of, let's say, PE companies and investors, are running away from the German market. The second one, you can argue, by the way, it's getting more costly. The build out, the bureaucracy is quite painful, and on top of that, the take-up rate of German customers is low as well. So why to invest now too much? Now, we have taken the decision that we keep the pace of 2.5 million households. And by the way, this is already to the limits of what we are able to do these days. If we learn that we can do it with better, profitability, and if we can do it, with more speed, I'm the first one, being open to think about whether we should do more. But today, I would say the 2.5 is already a challenge for us from the executional perspective. And you should know what we are doing today is building more than 70% of the infrastructure share in Germany. So we have significantly increased already the amount of our infrastructure share in the way how we are building, because a lot of, let's say, alternative networks are disappearing. So therefore, I think we are in a good way of executing along the principles of our strategy. I think we are not stopping now because everybody is getting nervous about the German market. I think we have to learn and to create the productivity to reduce the costs for the build-out. And don't forget, we have a super, super strong copper network. Yes, Germany is lagging behind when it comes to fiber, but Germany is one of the leading nations in Europe when it comes to average data throughput for customers because of vectoring and super vectoring. And therefore, we have to adapt as well customer needs. And I would say they're coming a little bit later when you really need the bandwidth.
Okay, with that we go to Ottavio over there, please. Ottavio, you need to press that button.
Let's try with that. Yeah, it works. So, Tim, you highlight the successful strategy, and a lot of data points support that. But the fact that you ran an incumbent, very successful incumbent strategy in Europe and a very successful challenger strategy in the US. What I want to ask you, I'm sure that you look a lot in your competitions. What if the competition can take a leaf out of your books and turn it around? And in fact, I'm talking about FWA. 5G has been a successful business model for the US because also FWA. And recently they actually upgrade their number of customers they want to achieve on that one. It's very profitable because you use spare capacity. What if someone else across Europe, Germany or any other country across Europe, would do the same to you? What do you reckon could be your reactions? And that could be done. And talking about the other way around, the US. In the US, basically, what you do in Europe, it's you build infrastructure to protect your market share, or at least in line with the market shares. Now, Timus is basically entering market share with someone else in in fiber, because effectively it start from zero. So what if the incumbents, could be the AT&T of this world, could be the cables, overbuild over where T-Mobile is building? Probably not today, but in the future. So what will be the competitive advantage of T-Mobile, aside from the fact the brand, that you know how to sell it, but what about if it will come down to pricing? So how are you going to react? Thanks.
Look, committing suicide. No, I'm kidding, you know. No, by the way, you're creating this worst case scenario. By the way, why haven't, AT&T and Verizon not challenged the T-Mobile networks, when we started our build out of 4G? Why haven't they found an answer on challenging us in the phase where we were very much focused internally, on getting this company integrated? So I can tell you, you can announce that, but it's very dependent on the execution and the way how you execute on things, the acuity on the way how you do things, the way of whether you are really a challenger or whether you want to stay to be a challenger. Yeah, so therefore, I think we are always more agile in the way how we are reacting on different market scenarios. But look, maybe you should discuss that with Mike later on in the Q&A. But look, there are always threats, big threats. Is 1&1 in Germany now the biggest threat for our mobile network? No, look, at the end of the day, he came up with a flat rate. By the way, it's not a true flat rate, but he's there, announcing something big. Is this now the end of the mobile market in Germany because we only have a price competition? I can tell you no. Yeah, and we have answers on the way how we are acting on this one. We were the ones then finding convergence as one of the answers in the European or German markets. So therefore, I think the question is the agility to adapt on things. It's the first thing. The second, I would say, look, this combination, having a challenger in the US helped us a lot to adapt. We have the family plans. We have a lot of, let's say, learned from our US side. And we are trying to bring always this mentality, not protecting something. I think I would not call us an incumbent who is protecting his position. I would call us a challenger who is constantly striving for getting better, to getting market share, to gaining, to be better than the others. And if you have this mentality, so whether it's, you're not in this kind of defense. You're more in an agile going forward. So let's discuss that later on in detail for each of the business. But look, we are leading the pack in 5G, no question. By the way, I'm not talking only the US now, I'm talking Europe. We are now leading the pack on fiber. I remember discussion with you guys where I said, oh, you're falling back, you will never make it against these altnets, yeah? Now we are by far the leader, on fiber in Germany already. We are gaining market share in all the European markets where we are operating today. So I think the combination of service, brand, high investments, and being very disciplined on even your productivity, I think this is giving us the best protection against any kind of attempts from outside.
Okay, thanks, Tim. And with that, we go to Robert.
Yeah.
I think I was tinkering with your thing yesterday, so that's sorry. I didn't know you were going to sit there, Polo. So Robert, please.
Thank you, Robert from Deutsche Bank. Tim, you mentioned GD and CEE towers as kingmaker assets. You're now used to a more arm's length relationship with towers. Have you moved to a position where you no longer need to co-control and could sell more, or is that a step too far given your current plans? And just a point of clarification, did you say you'd like to get to the high 50s in T-Mobile with the flexibility of the 15 billion, but it depends on your own share price and the relative attraction of Deutsche Telekom buybacks? Is that how I could summarize it?
I would say yes. The last one, yeah, that is how I meant it. And look, on the towers, you should talk to the chairman of TowerCo, yeah, who sits there, is Thorsten, yeah. And because so that's the way. I can tell you, I talked to our partners, Bruce Lett and David, recently, and the feedback which we are getting is excellent. Same fantastic collaboration. The business plan is ahead of what we had in mind. We are on a good track. We want to do more. Everybody is in this kind of mode in this tower market that, the multiples are, from our competitors very low. So there's this kind of moratorium so that everybody is focusing on its business. But this is only, I would say, a break. It's only a temporary issue. there will something happen in this market. It needs consolidation. There will more to come, and we are in a perfect spot to do this. And operationally, Thorsten is presenting later. You should ask him about, let's say, the day-to-day interaction, the way how the business case is doing. But I can tell you, there's no need. We get nice dividends, which are paid out of this company into our directions. The company is delivering, which is the most important for me, on the tower deployment. And you have seen that in Germany, our tower deployments is almost 3 times or 4 times higher than from our competition. So the company is delivering operational execution, and on top the financials are good. So therefore, for me, from a chairmanship, looking on this entity, I would say this is all going in direction. And perspectively, I believe we can do something on the portfolio management side by integrating our European assets into it. That is at least our ambition, monetizing that. And I believe that we can play a pivotal role in the consolidation of this market at one point in time. But more to come from Thorsten on this subject.
Excellent. Let's continue with, so I'm going to, this time around, I keep it simple. I start front and go back, and you will...
Yes, do me a favor. Keep some questions, for the others,
We will have enough questions for it. So Akhil, maybe next, and then we go.
Hi, it's Akhil Dattani from JP Morgan. Tim, you talked a lot about the brand value you've created over the last 4 or 5 years, and about the importance of being customer-centric. Versus the sector, obviously your trends look really good, but as you mentioned yourself, there's still room to go versus other industries. And so I guess I was trying to understand how you think about what's needed to bring churn rates and customer satisfaction rates to what best-in-class industries are, because the brand is there, but those metrics aren't. And I guess one of the things that's top of mind when I look through your slides is when we look at the digitalization of your business, like app penetration, versus other leading brands in other industries, it screens lower. So I'm just wondering, is that one of the key themes, or do you think there are other things we should be thinking about? Thanks.
John, look, following as well, by the way, we're very consistent in this regard as well here in the group. I followed Mike's discussion on the data-centric, driven company and the digitization first. We have the same discussion coming from Dominic later on, on the subject. I think the way how we serve a customer is a little bit old school. The way of, by the way, the identification of clients in the line, the way how we serve customers in the shops, the way how we send out bills, even in a digital format, the way how we are creating tariffs on a 24-month basis, in a very old school. So I think if you look to the digital world, they have much more flexible, more customer-oriented, more simpler version of serving their customers. And this is something which we really have to learn and to take and to embrace that into ours. This Magenta Advantage idea, the idea, for instance, to integrate in our app advantage for our customers. We have more than 10 million active customers using it. We have benefits we can share. We share that on this platform, and the customer, beyond his connectivity, he gets something which is value in money. And being it, let's say, a free promotion of Perplexity, or being it, let's say, Disney for free, or being it tickets for the Formula One, or being it tickets for the European Championship. People stay active in their communication with us. And yes, you're right. We have to catch up, but I think we are not so far away, and we have a lot of credibility for a lot of, let's say, for trust and for the brands, for the brand which we are running. So therefore, yes, this is the way, simplifying our customers' life, following the way how customers are using services in the digital world. Creating systems which are not overburdened by bureaucracy, doing automated services in a way that customer can easily, without interaction, experience the T brand. This is the way how we are driving it. And that, by the way, I think it will be, if we meet in 4 years again, you will see, hindsight, this huge transformation. For me, being so long with the company, it's amazing to look back how this company was, 20 years ago. And where we are today. It's unbelievable. And that is, by the way, we get a lot of feedback for that. And that is, I think, the next step up, which we have to do.
Great. So
but more to come from the presentations later on as well.
Absolutely. Next 3 and then Claudia tomorrow, etc. So that all fits very well and will hopefully address a lot of it. Emmet maybe next.
Good afternoon. It's Emmet Kelly at Morgan Stanley. Just one quick question, please, on the guidance out to 27 compared to the last guidance you gave. When you presented the last time in 2021, as you mentioned, Hannes, we were all in lockdown, and a lot of people thought that this might be as good as it gets for telco. Everybody was using a lot of telco services. And back then you gave revenue growth guidance of about 1.5% per annum going forward at the midpoint. But today you're saying that revenue growth guidance is going to be 4% per annum. It's quite a difference. It's 10% obviously over 4 years, which is over 10 billion euros. Obviously, Mike and his team has already given their guidance. Can you say what's changed versus 2021? Is it really about market share gains? Is it you have pricing power? Are the markets more rational? What's different about the top line now compared to 3 years ago?
Look, to be very honest and radical transparency here, the 1 to 2% were related to total revenues. And now we are talking about service revenues because we thought service revenue is a relevant number to talk about. So therefore, this is, but you're right. Our service revenue ambition is now higher than it was, 4 years ago. Now, I think there are a lot of elements. Nothing is has one reason only. The first thing is, it didn't get worse with the regulators. That is they really have changed, and we have less push. We have less, interventions. We have less, even some of the consolidations going back. These guys are, if you read the Draghi in the letter page, if you have heard Macron and Scholz in Meseberg talking about the telco industries, and like, we are now the opposite. We need protection. And it's surprising to be, so long with this industry and suddenly listening to politicians who wants us, to create the single European telco market, who wants us to protect the investments for the future. So therefore, I think something has changed there. Now, is the impact already significant? I would say no, but the trend is definitely there. Second element, we were able to pass through price increases to our customers. To be honest, for me, it was always a problem, personally, to say, I'm increasing my prices. Because, I do not want to lose my customers. And for me, customers are always more important than prices. So therefore, but it is working. We have more investments, we had higher costs, we had inflations, we had to do something about it, and we were able to do this. And by doing this, we were able to increase the ARPU and the revenues of our businesses. The third thing is, we are the more for more has worked pretty well. Our family packages and alike, we have taken, let's say, a lot of, the MVNO market, which was never, tapped from us into our core proposition, and we were growing on from this basis as well. So I would say the sentiment has improved for us, and the consolidation of this smaller players has accelerated. So therefore, I think it's a more reasonable industry, less interventions politically, and even some moves which we haven't taken in the past to increase prices for the services which we're offering.
And also tomorrow we talk about the B2B. That is an area where we expect acceleration generally. So maybe I follow up with Andrei next.
Hi, Andrei from Kepler. Thank you for taking my question. You've put AI at the center of your strategy, maybe ahead of many of your peers, and even with focus in T-Mobile US Capital Markets Day. We can see the link between AI and operating efficiencies and cost level, but do you think there are use cases for telecoms also to support the top line growth? And what kind of initiatives do you see on revenues growth over there with AI going forward? Thank you.
Look, to be honest, that's a good question. We had this kind of taker. We use AI models which we have there available, Maker, we are shaping them and fine-tune them. And then we had even the idea of facilitator to say we are selling AI services to generate additional revenues. Now, the demand out there for AI solutions is high. At T-Systems, Ferry can talk about that one. You know, everybody wants an AI solution. So there is an opportunity for us in the B2B sector to develop services. Now, what is the commitment? I would say it is a triple million, revenue potential, which we see here out of T-Systems and the B2B area. It's not the billion business yet. So the low-hanging fruits for us are sitting in the own use of AI at that point in time. We have to work on this one to make AI a service for our customers, especially in the B2B field. We see huge opportunities there. I mentioned some of them. If I'm developing a bot with prompted data from Deutsche Telekom, customer service and our product, and I do the same functionalities, but prompt the data with data from whatever, mechanical engineer or another company, I can sell this kind of service to a B2B service, to a B2B customer. So this is the way of how we are working on it. Digital X we had already some use cases in this regard. This is how we're looking at it. But to be honest, it's at the beginning. Give us a little bit more time to really elaborate the market potential here.
Yeah, and there will be a lot about this in the coming sessions. So unfortunately now can't take the questions anymore, but we'll have many more Q&A sessions, including one with Tim tomorrow. We have time to get everyone to ask their questions. Now it's time for the break of 15 minutes. After the break, we reconvene. And here Srini and Wolfgang Metze talking about Germany, and of course that's also an area of great interest, and he will answer some of the questions, I think, or address some of the questions you have just raised. So
and
thank you very much. Of course. So thank you all, and for being here, and I hope you can catch some rest now, and then we reconvene at the hour.